Hello and welcome to Knowledgist. So today we are going to discuss about top 200 MCQs of financial management that is important for the professional banking segment of BOI credit and PNB SO 2022. And these 200 MCQs will be apart from the daily 20 MCQs that we cover chapter wise in financial management. And tonight at 10 o'clock, we will be back with third chapter of financial management that will be dedicated towards the ratio analysis. So with that note, let's begin. Let's start financial management top 200 MCQs, most important MCQs for the exam point of view. And today I will be having some highlights of the MCQs. And this 200 set will be uploaded in application by tomorrow or day after tomorrow, because we are also filtering more MCQs and finding out the important ones for your benefit, looking into the time constraint. जबकि समय बहुत कम है, इसीलिए हम पूरा चूज किया हुआ हैंड पिक्ड MCQs आपको देना चाहते हैं टॉप 200 सेगमेंट में. और ये जो टॉप 200 है, ये अपार्ट फ्रॉम दी 20 MCQ जो हम डिस्कस करते हैं चैप्टर के एंड में, इसके बगैर होगा, इसके अलावा होगा. ठीक है, so let's start. Let's discuss. This is the PNB SO 2022 and BOI SO BOI Credit Officer and Credit Analyst course you are watching. If you have not registered yet, these are the course links, course options. You can check it out, knowledgist.in/BOI or /PNB. Dedicated course is in store. And this is our core team of BOI and PNB. It's if you are still studying with general YouTubers or someone who is not having enough experience in banking, then it is time to rethink where you are heading. Clear? So this is our huge result in PNB 2021. So please find out in credit and risk segment. These all are the some of the phases, not all. Some of the phases in 2021. Out of 220 selections, we got 115 selections in PNB, and this is our second. This was our second exam after first SBI CBO. Where we ran a full-fledged class. Okay, now the first MCQ is on your screens. Check it out. The first MCQ now is live. Please check it out. पहला MCQ अभी स्क्रीन के ऊपर है, आप चेकआउट करिए. एक सेकेंड, लेट मी एडजस्ट इट. यस, wealth maximization concept, the benefits from the projects measured in terms of after tax profits, capital, cash flows and accounting profits. Under wealth maximization concept, which we read in the first class, the benefits from projects are measured in terms of after tax profits, capital, cash flows and accounting profits. Your answers please. I will also be addressing your live queries. Yes, Abhay D. Abhay is answering D from LinkedIn. We are also getting this session is live in LinkedIn, YouTube and Facebook as well. Wherever you are watching, please answer us. Yes, accounting profits. Harsh saying A. So people are getting confused. The right answer is option number C, cash flows. Cash flows are exact and definite, and therefore avoid any ambiguity associated with accounting profits. Clear? Next, during inflationary period, the risk-free interest rate will be lower, doesn't change, higher, and cannot say. During inflationary period, and you are now heading towards inflationary period, that's why stock markets across the globe are declining. There is a food crisis, there is a inflation is at all-time high. Many countries are defaulting at their debt payment, like Sri Lanka, and recently IMF says like Sri Lanka there are 102 other countries those who are heading towards the Sri Lanka way. So things are very unpleasant outside. Yes, and in coming days, if this recession starts, there will be fewer recruitments. So if you are preparing, then prepare hard, prepare with the best. Yes, Tapas, they very good. You are saying higher. It must be higher than, you say, if you saying, then it must be higher. Yes, it is higher. The risk-free interest rate will be highly significant in the context of general application of capital asset pricing model, which is based on the modern portfolio theory. And when the inflation hits market, risk-free interest will be the most sought after instrument, right? Implicit cost is also called marginal cost, opportunity cost, composite cost, average cost. This session we have not taken. In upcoming sessions all this will be covered, so MCQs are here in front of you. Implicit cost is also called marginal cost, opportunity cost, composite cost, or average cost. Hardeep Kala is back. Okay, nice to see so many of you answering in the right way. That's the great way. Yes, Anil Sahu, you have gone in wrong way. Also Hers from LinkedIn, Vibhuti Kumar Behera from LinkedIn, is right. Yes, Vibhuti is right. So it is opportunity cost. Clear? It is opportunity cost. In economics, an implicit cost is also called imputed cost, or implied cost, or notional cost is the opportunity cost equal to what a firm must give off in order to use a factor of production for which it already owns and thus doesn't pay the rent. Right? Very good. I think today most number of people are joining us from LinkedIn. That's a great show. Okay. So now we are not only present in YouTube, in LinkedIn, we are also equally viewed and equally loved. So thank you. So, next question is on your screens. In India, preference shares must be redeemed within a period of 3 years, 10 years, 6 years, 20 years. Please go ahead, and if you have not subscribed, kindly subscribe. Yes, and join the full BOI course. Here is a discount coupon for you. And yes, the preference shares in India must be redeemed within a period of how many days? 10 years, 20 years, there is confusion. Someone is saying 3 years from LinkedIn. Yes, let people have some ambiguity for a few minutes. I think those who are my existing students must answer, because last time also we picked this particular MCQ for our central bank, PNB, last year PNB. Yes, it is 20 years. Those who said D is the right answer. The Amendment Act of 1996 to the company limited shares can issue company limited by shares can issue preference shares which is irredeemable or redeemable for that matter, could be maximum for a period of 20 years. Clear? Dividend yield method, the cost of equality is ascertained as a percentage of expected dividend, WACC, IRR, or expected profits. Can anyone tell me here what is WACC mean? What do we mean by WACC? Namrata is right. Sikha Katiyari is also right. That's a great show to see so much of excited and energetic students and having so much of knowledge. So definitely this BOI and PNB exam is going to be very competitive, I believe. Yes, what could be the answer? Right answer here. Those who are all watching us LinkedIn, please find us in YouTube too and subscribe to our YouTube. And those watching us in YouTube can also join us in LinkedIn or Facebook for that matter, wherever you are convenient. Yes. Very good. Answer is expected dividend, and WACC stands for weighted average capital cost or cost of capital. Clear? It is determined by required rate of return is equal to expected dividend payment by existing stock price plus dividend growth rate. All that will be covered very soon in financial management chapter wise. Tonight we are heading towards chapter 3. It will be mainly ratio analysis and financial planning related to ratios, and then the MCQs followed by that. In case of existing shares, cost of equity is computed under dividend yield method by dividing dividend per share with face value, net proceeds, market value, or none of these. Yes, so much of enlightened students. That's a very nice to have this kind of experience. All our students are very, very knowledgeous, I believe. Yes, your answers, please. This kind of practical questions are being asked. So I want my students to be prepared in the right manner, in the right direction. And it's a very good opportunity for you to clinch the job in PNB, BOI, very less number of applications, and in internet, very less number of resources available. In various platforms, if you go and see the credentials of the educators, they are merely the YouTubers, those who are teaching to the POs and clerks, as the opportunity is there in their hands of a new recruitment, so they are teaching. So if you are preparing, prepare in the right direction. So the right answer is market value. Okay. Market price per share and multiplying the result by 100. Clear? Is it clear now? Okay. Team has received 100 messages. Great. Thank you. Next, let's go ahead. In case of existing shares, cost of equity is computed under dividend yield method by dividing dividend per share with, I think we covered it. So it is nothing but the market value. Clear? Next question on your screens. Capital composition of a company including long-term, medium-term and short-term finances is called capital gearing, capitalization, capital structure or financial structure of a company. Your answers, please. Your answers, please. I am very delighted today to see all of you answering almost all the questions in the right manner, and hopefully there are very less number of people will be outside, those who could answer all these tough level questions in right manner. These are the initial level. I think it's medium level. Tough level are saved for our existing enrolled students only. With explanation, we will go one by one. Yes, it's capital structure, no doubt about that. The question is self-explanatory. When it is a composition of all short-term, long-term, everything, then it is composition of capital or the capital structure, you can say. Self-explanatory, it's a googly, right? But next question you must answer. The ratio between debt and equity in the total capitalization is called capital gearing, capitalization, capital structure, financial structure. Options are same, but answer could be different. But answer could be different here. Very good, Shekhar, very good. That's why I am making this your comments live on screens so that you people will stay inspired. I give equal weightage or equal screen time to all my students who are sending messages. Very good, and I found all the answers so far in right directions. All of you are going to crack the exam. And that's for sure. All those who are answering this question, they must crack the exam this time. Yes, there is no doubt about it. I should not show the answer, but yes, it is capital gearing. We don't need to discuss. We don't need to go to the explanation as well. When there is sales exceeding the break-even point, then the operating leverage is favorable, no effect, unfavorable, none of these. These are practical questions. See, in normal areas, in PO clerical exam, they will ask a MCQ, what is the growth rate, or something like Axis Bank is acquiring any other company or not. So this kind of straight answers, but this is a question. It's a hypothetical question. What is going to happen if this is the scenario? So this kind of questions, if you are answering, then you have cleared your fundamental level, your analytical skills at right direction. So that's why before MCQs, I always emphasize on the theory part. And in financial management, that's why I come up with so many MCQ, so many slides on theory itself. Yes, do share it. Yes, this is favorable. The answer is favorable. The answer says it is favorable, right? You can join the one-stop course link, knowledgist.in/BOI. Okay, next question. That's all for tonight. This is our exclusive result. If you have not joined our courses, do join. See you at 10 p.m. inside Knowledgist. We'll have a very important session. Apart from ratio analysis, we'll be also discussing on financial planning, MCQs, and both the ratio analysis tonight. And for the next chapter, we are saving the profitability ratio and turnover ratio. But today we will be covering the liquidity ratios and the leverage ratios. Clear? Yeah. Credit, there is so much of existing pre-recorded materials available. So this time we are focusing more on financial management and professional banking, right? Credit risk. Yes, 10 p.m. Anil Sav is saying eagerly waiting. Thank you for that. And don't forget to subscribe. And if you are watching us through LinkedIn, then follow the page, share with your acquaintances over Facebook and LinkedIn. So thank you. See you there. Okay, good night.